This is Ifan from the Strategic Day Trader, and this is your market wrap for June 13th, 2019. We got about 4 minutes left. Q's up 0.41% and SPY 0.25. Okay, coming into today, we were noticing that the hourly was looking like it wanted to break down, and we had our line in the sand right here on the SPY. Okay, 289.50. And on the Qs, we had our line in the sand here for losing that bearish bias over this right here, 183.80. And we kept up and we broke through it. Okay, so you can see the Qs here went to 183.87, broke it just by a little bit, and SPY broke through it, right, and then didn't really get much follow through either. So what was the plan when that happens? When that breaks, we would be neutral, right? We're shifting to a neutral bias, okay, and wait to see if we get follow through and then continuation. Okay, so not bullish bias yet, at least in the short term. Yes, the long term, monthly, weekly remains, long term remains bullish, but in the short term here, just looking to see if we pick a direction. Okay, so you can see there wasn't much follow through to this low of the day base, didn't want to break down. Okay, instead the market gapped up. Okay, and so that puts us back into neutral territory. So we'll look to see if we break above today's high, we can get follow through. Next entry can be played long. If we end up breaking below the base, then we will be back to a bearish bias. But right now, neutral going into tomorrow, right? And I think that's the right place to be. I mean, we got that signal right early on in the morning, okay, that we should be neutral, not bullish, not bearish. And so far, very sideways on the Qs and SPY today. So right away, that put us kind of at a neutral bias. And so the rest of the day, you can see, it's just kind of been a lot of choppiness back and forth. Okay, so you can see kind of if you're looking at it just a smaller time frame here, like the 15-minute, right? Down to lows, got bought, retest of the highs, got sold, now back to lows and getting bought again, right? That's how you create sideways consolidation, right? You stay within a range. Okay, so going into tomorrow, nothing too fancy, just going to be neutral. Wait to see if we break out of the range of the last 2 days. Okay, all right. So what I wanted to go over today was something that I've gone over in the room the last couple days, and I think hopefully has saved some people some losing plays from being in some losing plays, and also in catching the winner. Now, I'm going to use this mat as the example of what it should look like, okay, when we get the 1 minute bar here after the gap up, right? And then I'm going to show you more examples of what it shouldn't look like, okay? And it just so happened that we got more examples today of what it shouldn't look like than of what it should look like, okay? So when the mat opens, okay, and we get this initial 1 minute kind of range that gets set, and it ends up breaking the range. So you can see it opened here, ends up right a few minutes after the open, breaking down lower. Okay, if it's going to break the initial lows, it should not get follow through. That means it shouldn't keep making lower lows. It should immediately either start to base or immediately bounce. Okay, and then you can play the next play, or if it starts to base, you can play above the base. Okay, so if it breaks the immediate opening range, it should not get follow through. Okay, we saw yesterday on the MX, this is when I went over it yesterday. I said if you were watching this MX yesterday, right, what happened when it broke the range, right? So here's the first bar, and then we broke the opening range, lower low, and then another lower low, right? So this, right, bounce should not be played, okay? Because you're making low after low after low, okay? And then what happened, right? Continued, right? That break should find that there are no more sellers if this is going to be bullish. But what this found is that there's continued selling, right? So when we came into today, right? And we were watching the LU to see if that wanted to set up along, or the RH if that wanted to set up along. What happened, right, this morning? Okay. First, we got the first bar opening range, and then it broke. And then what happened? Lower low, another lower low, another lower low, and another lower low. This, if this were going to go higher, or at least tell us that the selling pressure was not that strong, should have stopped right here and then started to either base or immediately bounced. Instead, you got follow through. So anybody who tried to play this bounce, right, you got kicked out. You tried to play the next bounce. So you can see, even especially after this first one fails, right, you don't want to be aggressively trying to play against this trend. Let's take a look at the LULU. Okay, LULU, what happened? Here's the opening bar. We broke below, and then another low, and then another low. Should we be playing this bounce? No, right? That's what I'm trying to get at here, right? So this, you have 1 minute retracement, 1 minute pullback, right, is probably not going to follow through. Okay, that is a warning sign that this selling pressure is for real, unlike the mat, right, where it tried to break and after it broke down, stopped, just went sideways, right? And then what happened? Rallied all the way back up to the highs. This was an official call yesterday to be played long. The LULU, RH, MX were never called. Okay, so you know, it's one of those things that if you're not really thinking about it and you kind of just hear a lot of words of wisdom and take them at face value, can be very confusing, because there's the common saying, right, which is buy low and sell high. So that tells me that when the LULU is going down, that I should be buying low with the intentions of selling high. Well, what happens when I buy low and it keeps going lower, right? Same with the RH. But then there's also another saying, well, don't catch a falling knife. So if it's going down, you know, it's saying don't just try to step in front of selling, right? And because if something's in a downtrend, it's probably in a downtrend for a reason. So if you take these things at face value, they are direct contradictions. And you'll kind of find that there are a lot of things like this that get thrown around that maybe sound good, sound like, you know, great pearls of wisdom. But then when you kind of put them into practice, that really all they do is give you a false sense of confidence, and because you need some kind of context. Okay, so that's what I'm trying to do here, right? Is that when this bar breaks the opening range, opening 1 minute bar, or maybe two minute bar, right? In the case of the mat, didn't break right away, right? And then gets follow through, meaning that it keeps putting in lower lows. And this is the same for if you want to short something and it's continuously making higher highs after the open, right? That you don't want to step in front of this after it's told you that this selling is for real. Okay, so yes, we can play a pullback, right? You don't want to play something, you know, say in the case of the mat yesterday, right? If it's this many bars up, you don't want to be buying high and then, you know, getting it at the end of the move. So yes, like in this case, you know, buying on the pullback or buying low and selling high is the right thing to do, right? Because it proved to you that it tried to go lower and pretty much got rejected, right? Breakdown and then no follow through, sideways and then higher, right? So, and then, you know, it's true that something like the LULU, right? You don't want to just keep buying new lows, expecting that this new low or this new low or this new low is the bottom, right? So, yeah, it's one of those things that whenever I hear some of these things, even people in our room sometimes, you know, put them out because it may be relevant to them in a specific situation. But I think in general, I think we have to understand what it means for our personal trading and what that means in the right context. Okay, so I just wanted to bring that to your attention because I know some people kind of were, you know, were looking at it today, and you know, some of their positions would have either been managed differently based on this or not been played based on this concept. So I think you know, avoiding losses is just as important as picking the winners. Okay, so that's going to do it for today's market wrap. You can definitely take this concept, apply it to tomorrow, and see if that keeps you out of some plays that end up failing. Okay. We'll see what the market brings us tomorrow. Don't have big expectations for tomorrow. Neutral going into the open tomorrow, and then using the range from the last couple days to as a kind of gauge to see which direction we're going to pick. Okay, so that may not come tomorrow. That may come on Monday or next week, but that's what we're looking at now. Okay, neutral bias going into tomorrow. See what the market brings. And I will talk to you then. All right, have a great evening.